Very good evening, everyone, and welcome to today's discussion on tested party, foreign AE versus Indian taxpayer or Indian taxpayer versus foreign AE. I am CA Gaurav Garg, and I'm sure by the end of this session, uh, we all of us would be clear on the whether one can take foreign associated enterprise as a tested party or not. And sorry for yesterday. Yesterday, I was not able to join you at 1 p.m. We discussed that on every Sunday we'll come up with judgments, that what are the recent judgments on transfer pricing issues, and we're going to discuss recent judgment on transfer pricing or international tax. But because of some work yesterday, I was not able to join you. So I thought let's take that session today, and for sure because I have delayed, so I have some bonus for you. It will not going to be one case study, or it will not going to be one case. There will going to be number of cases which we're going to discuss today on foreign associated enterprises, whether one can take foreign associated AEs as a tested party or not. So let me start, guys. And if you have any query, you can always put it in a comment box. I would be happy to answer the same. Here comes my slide show. Okay, so before we jump on to one can take foreign AE as a tested party or not, I think it is important for everyone to understand the concept of tested party. What qualifies tested party, or who is tested party? In an international transaction with your foreign AEs, you will find generally there are two parties to the transaction. It could be the Indian taxpayer, and another would going to be the foreign AE. So let's say you are buying goods or providing services, and then you have certain methods: comparable and controlled price method, resale price method, cost plus method, profit split method, transactional net margin method, and any other method, rule 10AB. So out of all these six methods, you need to choose one method which should be the most appropriate method for determining arm's length price of the transaction. So for three methods, that is cost plus, resale price, and TNMM, concept of tested party becomes important. So in these three methods, what we are doing, we are benchmarking the profits, and from profits we are computing the arm's length price. So under RPM, you benchmark gross profit by sales. Under CPM, one benchmarks gross profit by direct and indirect cost of production. And in TNMM, we benchmark operating profit by any relevant base, and that relevant base could be your sales, it could be your cost, it could be your assets. So now when we have two parties in the transaction, for which party we need to benchmark the profit, it's come from the concept of tested party. So you may have, as I said, we will have more than one party in the transaction. So to which party we need to remunerate? So which party is the least complex in the transaction? Let's say I'm into manufacturing, I'm doing R&D in India, I'm doing manufacturing, procurement, a lot of functions I'm doing. Whereas my associated enterprise outside India is simply involved in purchase and resale. So if you want to benchmark profit, so which entity will have more dynamic profit? It will be India, because India is involved in a lot of functions, whereas the foreign AE is involved in very thin functions, not number of functions, only purchase and resale, that is a distribution function. So technically, it would be easier for us to benchmark the profits of the foreign entity in this case. Similarly, I say let's take a reverse case wherein the foreign A is involved in R&D, foreign A is involved in manufacturing, foreign A is involved in the brand development, and in India you are simply doing purchase and resale activity. So which entity becomes simpler? The Indian entity becomes simpler. So if I ask you to benchmark the profit, so it would be easy for you to benchmark the profit of the Indian entity. It's something like benchmarking the return for fixed deposits vis-a-vis benchmarking the return on the equity investments in the listed companies. So listed companies carries more risks, so it becomes tough to benchmark their profit, whereas fixed deposits carries less risk, so it becomes easier to benchmark returns on the fixed deposit. Similarly, when your functions goes up, when in the transfer pricing world, when the functions goes up, ideally the risk also moves up, and because of the higher risk one carries over the other, it becomes tough to benchmark the profit of one entity vis-a-vis other entity. So what you look for, or what we look for which is the simpler entity, which is the least complex entity, and the least complex entity is chosen as the tested party. But in addition to it becoming a tested party, one should have the relevant comparables also to benchmark the profit. So this issue has went to the court, to the Indian courts, whether foreign AE can be considered as the tested party or not, or should we stick to Indian company benchmarking the profits of the Indian company. So let's now start the session and understand the concept of tested party, which is there in the OECD. We have OECD Transfer Pricing Guidelines 2017 para 2.65. It's read, however, a one-sided method, that is traditional transaction method or transaction-led margin method. Traditional transaction method means, RPM or CPM, that is resale price method or cost plus method, may be applicable in cases where one of the parties makes all the unique and valuable contributions involved in the control transaction, while the other party does not make any unique and valuable contribution. In such a case, the tested party should be the less complex one. Very simple. So out of two, which one is making uh, less contribution? Which one is not contributing unique intangibles or valuable intangibles to the transaction? That party becomes your tested party. Also, para 3.18 suggests when applying a cost plus resale price or transaction net margin method, as described in chapter 2, it is necessary to choose the tested party to the transaction for which a financial indicator, markup on cost, gross margin, or net profit indicator is tested. The choice of tested party should be consistent with the functional analysis of the transaction. As a general rule, the tested party is one to which transfer pricing method can be applied in most reliable manner, and for which the most reliable comparables can be found. That is, it will most often be the one that has less complex functional analysis. So OECD is quite clear that you need to choose an entity which has got less complex functional analysis, and same wordings, or I will say the same understanding, is there in the UN Transfer Pricing Manual. But when you come to an act, when you come to an Indian Income Tax Act or Indian rules on transfer pricing, you will find that the word tested party is missing. So technically, we do not have tested party concept in our law. Law means, the regulations, the Income Tax Act and income tax rule. But yes, the tested party concept is widely used, I think, since the inception, since 2001, since the TP studies started. Since then, we are using tested party concept. Now, let's see what the courts are saying. The case went to the court. So first, I'm taking cases which are against taking foreign AE as a tested party. So we have Onward Technologies Limited, very old case, which says it's a Mumbai tribunal. It says the natural corollary which thus follows is that it is the profit actually realized by the Indian SSE from the transaction with its foreign AE, which is compared with that of the comparables. There can be no question of substituting the profit realized by Indian enterprise from its foreign AE with the profit realized by foreign AE from the ultimate customer for the purposes of determining the ALP. The contention of the learned AR in considering the profit of the foreign AE for the purposes of comparison with the profit of comparable to determine the ALP of transaction between the SSE and its foreign AE misses the wood from tree. This is patently an unacceptable position, having no sanction of the Indian transfer pricing law. So the Mumbai tribunal, in case of Onward Technologies, simply rejected. It wrote, the Mumbai tribunal observed that the Indian law does not permit you to take foreign AEs as the tested party, and one should take only Indian company as the tested party. Now, moving forward, we have a Punjab tribunal judgment in case of BCART Industries Private Limited, wherein it is the tribunal observed the term enterprise under the TNMM method, and for that matters, all other method has been used to indicate the assessee in whose hands the benchmarking of the international transaction is done. And the term associate enterprise has been used to denote the foreign AE being the other related party to the international transaction. Term enterprise has been used for the Indian assessee purchasing the goods for resale, and the term associated enterprise has been used for seller foreign AE. We fail to comprehend as to how the profit realized by the foreign AE can be relevant when the profit of the Indian enterprise is sought to be ensured at ALP. So both the judgments, uh, that is BCART and Onward Technologies, in these two cases, it was rejected that one cannot take foreign AEs as a tested party. So tribunal very clearly, two tribunals very clearly, they said you cannot take foreign AE as a tested party. And then there are more judgments came on the same ground that you cannot take foreign AE as a tested party. But yes, we do have favorable judgments also, and we have a Delhi High Court judgment in case of G Money Financial Services Private Limited, wherein earlier the tribunal observed that you cannot take foreign AE as the tested party, and the SSC went to the Delhi High Court. And what Delhi High Court observed, let's see. It says the SSC has approached this court against the observation and finding of the IT18 para 10 to para 18 to the effect that foreign AE cannot be considered as a tested party. Reliance is placed upon section 92B to contend that there is nothing in the provision inhibiting such consideration. This court notices that for reconsideration and determination of the appropriate method, as well as appropriate comparables and the tested party, it would be convenient and appropriate for the TPO to consider the question which the SSC urges in the present case. The TPO is therefore directed to overlook and not feel bound by the observation of the tribunal and render findings on the merit of the issue. So Delhi High Court very clearly told to the TPO that you are not bound by the IT80 order. And the IT80 order was that you cannot take foreign AE as a tested party. So the Delhi High Court went into the favor of taking foreign AE as the tested party based on the merit. So if the merit of the case allows, then yes, you can take foreign AE as a tested party. But if the merit of the case does not allow, you will not take foreign AE as a tested party. But certainly merit does not mean that law is stopping you to take the foreign AE as a tested party. So merit would mean the functional analysis, availability of comparable, least complex entity, all that stuff, one needs to check. And again, there is a very interesting judgment from Mumbai Tribunal in case of Nivea India Private Limited. Again, a very latest judgment. There are a number of cases for the subject matter for different years. In case of Nivea, so I just wrote one of the citation. In this case, the case went to the tribunal, and now the directions have been issued to the DRP, wherein the tribunal observed that one can take foreign AE as the tested party, and it gave a direction, and direction are that first DRP needs to examine the profile of foreign AE, and if after examining the profile of a foreign AE, if DRP believes that yes, foreign AE can be considered as a tested party, then the next question comes the comparable chosen by the SSC. Now, first DRP will determine whether one can take foreign AE as a tested party or not, again on the merits, not on the law that the law does not allow, nothing like that. So it's a clear cut instructions to the DRP. See the merit. If foreign AE is the least complex, take foreign AE as a tested party. Then see the comparable considered by the SSC. And if you find that comparables considered by the SSC after applying various filters, functional comparability, financial comparability, availability of information, availability of whether the comparables are benchmarked on a country by country basis or you have a regional comparable. So both are allowed depending upon the availability of information. So if DRP is not satisfied after reviewing the comparables, if DRP is not satisfied with the comparables, then DRP can make its own comparables. Now, in this case, the tribunal did not said that if the foreign company, if the comparables why if one is taking foreign SSC as a foreign A as a tested party, and if comparables are not available, then the DRP can take Indian company as a tested party. No, nowhere ITAT wrote that. ITAT simply said if you do not satisfied with the foreign comparables of the SSC, then you choose your own comparable. So apparently it seems, the ITAT has strongly upheld that foreign AE can be considered as a tested party. Now, moving ahead, we have TCG Digital Solution Private Limited. Again, a very wonderful judgment. I like one of the point in this, and I would like to highlight. Uh, See, para 9 of this says, now we shall address grievance of learned DR for the revenue. Before us, learned DR for the revenue submits that SSC TCG digital accounting year ends as on 31st March every year, whereas in case of a TCG LLC, the accounting year ends as on 31st December year. So in this case, the SSC wants to take foreign A as a tested party. It took foreign A as a tested party. So one of the ground on which the department argued, there are two different financial years. A's financial year is ending on 31st December, whereas the taxpayers financial year is ending on 31st March. And because of this difference in the financial year, one cannot take foreign A as a tested party. So what court said, what tribunal said, let's read. The accounting year end is on 31st December every year. Therefore, it is difficult to compare financial data of these two entities, and hence AE should not be treated as tested party. This is what uh, the argument of the department. And the tribunal said, we are of the view that in order to determine the tested party, only functional asset and risk analysis is required. That is, functions, asset, and risk remain same irrespective of the fact that accounting year of both the entities are different. It does not make any difference because function, asset, and risk are being compared and not the financial data. The functions, asset, and risk remain same where accounting year is ending on March or December, thus for determining the tested party. And then it went on to say that you can consider foreign E as a tested party irrespective of the difference in the financial year. So we have a UNTP manual wherein there are different chapters. India has one of India. We have chapter on the India position also. In India position, what India the position says, and it says position is in favor of taking foreign as the tested party. Let me read it for you. The primary onus of providing the arm's length price of transaction lies with the taxpayer. In most cases, the Indian entity is taken as the tested party and Indian comparables are used. If the foreign AE, foreign associated enterprise, is the less complex entity, it is taken as the tested party. So not only the jurisprudence is coming in the favor of taking foreign AE as a tested party, but also it is clearly documented in the UNTP manual under India's position that yes, foreign AEs can be considered as the tested party. Now, in one of the judgment of Ranbaxy Laboratories Limited, the ITA number 196 Delhi 2013, APA, Ranbaxy entered into APA with the tax authority. So part of APA was mentioned in the tribunal judgment. And let's see what happened in that APA. It is written, so this is the observation of the court in para 26, wherein the court observed that appellant has entered into advance pricing agreement under section 92 CC of the Act on 7th August 2015 with the CBDT for AY 1415. According to para 1F of that agreement, and it's important, tested party means associated parties as listed in Appendix 1. According to the Annexure 1, it has been agreed between the parties that TNMM with PLI of operating profit margin computed based on audited financials of AE being the tested party shall be the method to benchmark the covered transaction in the case. In order to select the comparables, regional benchmarking shall be applied in case country by country benchmarking is not feasible. The same shall be preferred over regional benchmarking. So very clearly, when India is entering into APA, that is Advanced Pricing Agreement, Indian tax authorities are taking foreign company as a tested party. Indian tax authorities are allowing that, first of all, if one should try for a country by country benchmarking, but if country by country benchmarking is not possible, one can go for regional benchmarking. So the law remains the same whether you are doing TP documentation or whether you are doing APA. So if under APA tax authorities are allowing foreign A as a tested party, then certainly while you are making a transfer study, you can take foreign A as a tested party. So not only jurisprudence, though jurisprudence, I personally believe have much more weightage over UNTP manual and APA. But if you see in a consolidated way, jurisprudence plus position in the UN manual plus what Indian tax authorities are doing in APA, then very comfortably one can take a position that yes, if foreign A's are least complex entity or less complex entity, one can certainly consider foreign A as a tested party. But yes, if you are considering foreign A as a tested party, be prepared to share the financials of the foreign A and also do a proper search on the relevant databases. And you should also have financials or annual reports of those comparables. If you have all these details, then for sure, you can take foreign A as a tested party. So this was my presentation for you for today, guys. If you have any question, you can put the question in the comment box and I would be happy to answer the same. For today, guys, if you have any question, you can. I'm waiting for questions. Okay, I cannot see any question. I'm sure my presentation will going to support you in carrying out transcribing documentation. If you need this presentation, I would be sharing it on Telegram, my channel. It's Transcribing and Tax. I would be sharing the link to the Telegram channel in the description of this video. From there, you can come to the Telegram channel and download the presentation for your own use. Thank you, guys. See you soon.